So a lot of times when people inherit a home with a reverse mortgage, they feel like they have time to just figure out what to do with it. There is a timeline on that, right? They can't just say, hey, we're going to take care of it when we take care of it. Help them understand more what that entails.
Yeah, you're exactly correct. There is a finite time frame involved with these reverse mortgages after the owner passes away. So after the owner passes and there's a reverse mortgage associated with their property, they have up to 12 months to figure out something to do with that loan that remains on the property. The heirs can choose to refinance it in their name. They can choose to sell the property and just enjoy the equity that's accumulated in the home. But there is a finite time frame, and it's up to 12 months after the date the current owner passes.
And after that 12 months, if they still do nothing, I mean, it's full blown foreclosure proceedings at that point, right? It's
That's
not taken
correct.
lightly.
That's exactly correct. So if that 12-month period comes and goes, the lender is going to initiate foreclosure. And if there is any equity in the home at that point, they're in jeopardy of losing a big chunk of it. So although you do have some time to figure things out after you grieve, there is a finite time frame in which you have to figure them out. So it's, in my opinion, that it's best not to drag your feet, figure out your options ASAP so you can make an educated decision as to what's best for your family.
Nice. Oftentimes people say, I inherited this house, it has a mortgage, I'm just going to keep paying it and I'll do that indefinitely. And while some people may find a way to make that work with a regular mortgage, if you're thinking you can just inherit a reverse mortgage, it doesn't exactly work that way, does it?
No, it doesn't. That goes back to the finite time frame that we have to pay off this mortgage one way or another. So an heir who inherits the property with a reverse mortgage associated with it can't simply pay on that mortgage into perpetuity until it's paid off. We have that maximum 12-month period in which they either have to sell the property, refinance the property in their own name, or come up with the cash to pay it in full.
And that's exactly why they should reach out to you, because if they need to refinance that, you can help them understand their options and know what that looks like so they could actually keep the house rather than feeling like they're just stuck selling it and that's their only option.
Absolutely right. So that happens oftentimes with a lot of my clients who are heirs. When they inherit a property with a reverse mortgage on it, oftentimes they want to keep the property. Oftentimes there's a ton of equity in the place. They either want to move into it themselves or they want to keep the property as a rental and generate some rental income that way. So probably 80% of the time, my clients opt to keep the property, refinance into a conventional loan in their name, and just maintain the property either as their primary residence or an investment.
I hear it sometimes where people just think if they reach out to the lender and are open and communicative with the lender, as much as we want to encourage that, it's not a guarantee that they're going to give you more time or say, hey, there's a reverse mortgage. Usually you got to take care of it, refinance it, sell the property, pay off the reverse within a year. Just talking sweetly to them doesn't guarantee that they're going to extend the time frame for you, does it?
It does not guarantee it, although it's a very, very good idea to reach out to the lender and let them know your intention. By doing that, let's say, for example, it takes you a little bit longer than that 12-month period in order to figure out what the best move is for the reverse mortgage. As long as you're open and communicative to them, they're more likely to grant some sort of extension. However, they are very rare that they do that, which is why you don't want to drag your feet. You want to figure out your best approach just as soon as possible.
Awesome. So oftentimes people think that just because there's a reverse mortgage, there's no equity in the home and nothing left for them. And conversely, when I've worked with people in their golden years who use a reverse mortgage to purchase their next home, one of the concerns that I hear first is that there won't be any equity for their family when the time comes and they pass on. Could you help people understand this in a different way, that there actually is usually a decent amount of equity in homes purchased with a reverse mortgage?
Well, usually there's actually a ton of equity in these homes with reverse mortgages associated with them. Reason being is when we originate a reverse mortgage from the get-go, in your situation on a purchase transaction, the borrower has to put down quite a bit of down payment to take out the reverse mortgage. So it's set up with a ton of equity from the jump. Although the equity does get eaten away each month because the borrower is not making any monthly payments, because we set the loan up with a bunch of equity in the home from the get-go, it's very seldom that I get in a situation where an heir inherits a property and there's no equity because of the reverse mortgage. It's actually oftentimes the converse.
Nice. Thanks for explaining that. So just because there's a reverse mortgage, don't assume anything. Reach out to me, see if there's value in the home, what it's worth, and we could also figure out what's owed on the reverse pretty easily, right?
Yeah, absolutely. It's very easy to figure out what the balance on a reverse mortgage is. Just like any other mortgage, you get a monthly statement that shows your interest rate, it shows the outstanding balance. And then once you do your market analysis of the home itself, we can take into consideration the amount owed, find an equity point, and then we know what our options are going forward from there.
Perfect. And if you've lost a loved one and they had a reverse mortgage on the home, you find that statement. What do you need to do to make it so that the bank will actually talk to you? What are those steps?
Well, first of all, once the owner passes away, one or many of the heirs have to reach out just as soon as possible to the lender to let them know notification of death. From there, they'll be logged in as a person who's able to communicate with regard to the specifics of the reverse mortgage. It's at that time that you can start developing a plan, let the lender know the intentions of your plan, just so they're completely aware of what your intentions are and a time frame to do so. You don't want to get into a position where you start late and then you're scrambling at the 12th hour and running out of time.
Absolutely. And what do they typically need? Like if you're in probate, they need letters from the court to show that you're the person to talk to, or if it's in a trust,
Yeah, so if it's in a
can they
trust,
just see that one page showing that you're the successor trustee and you're good to go?
that's correct. So if the property is in a trust, which is also always the wise way to hold real estate, as long as we can show that you're the successor trustee, they'll talk to you about anything. If the property is in probate, sometimes it gets a little bit trickier. However, with documentation from the court, then they'll be regarded as if they were a trustee.
Awesome. Another thing that I often hear from people who inherit homes with a reverse mortgage is that if they walk away, it will just completely ruin their credit. And that not handling something, or if there's the home's worth less than is owed, that their credit's going to be destroyed. Can you help put their minds at ease?
Yeah, so if you inherit a property with a reverse mortgage associated with it, it has nothing to do with your credit. That loan was secured in the departed's credit. Your social security number, your credit profile is not associated with it at all. So if it comes to a point where you do default on the loan and foreclosure begins, it doesn't impact your credit at all because your social security number is not associated with that particular loan. And again, it's a non-recourse loan.
Nice. And what about the people that feel like we have a reverse mortgage, but we need to make some improvements before we sell this home? We definitely want to sell it, but give us a minute because we need to remodel. We need to do a few things like that. The lenders that have these reverse mortgages, how do they view that? Are they going to give you extra time just to make an improvement or make a change to the property?
Well, they're already giving you 12 months from the jump at the max. If you communicate with the lender and you can display that you're doing your best to get this done in a timely fashion, they may work with you. But again, we don't want to get into a position where we're scrambling at the last moment, because then there's a possibility of foreclosure proceedings.
And if you're saying like, well, hold on, I just need to build this ADU really quick, they're probably going to tell you to kick rocks on that one, right?
Absolutely. They're not going to like any kind of construction or augmentation being done to the property. Of course, cosmetic stuff, paint, flooring, that type of stuff that just makes the property more suitable for the sales market, that's going to be okay. However, any kind of major construction or remodel is not going to fly.
So no major construction, no remodels, but health, safety, cosmetics are usually good.
Absolutely. Health and safety issues, of course, cosmetic stuff that just makes the property look more presentable. All of those things are just fine.
Awesome. Perfect. I've also heard people mention that they think that there's nothing they can do because the lender who has the reverse mortgage owns the house.
No, that's not true. Just because there's a reverse mortgage on the property doesn't mean that whoever took out the reverse mortgage does not own the property. Okay, so the recently departed in this particular instance, they're the owner. Once they pass, their heirs are the owners. So just because you have a reverse mortgage on the property, I know there's a stigma about this. It does not mean that you do not own the property. The lender does not own the property. The owner owns the property.
Reverse mortgages by nature have changed a lot in the past 4 years, especially since FHA has come in to back them. What do you wish more people knew about those changes? Because so many people just think that reverse mortgages are some awful bad thing.
Well, firstly, the fact that they're non recourse loans. So, once I explain to my clients that they're non recourse loans, these loans kind of sell themselves because that's the largest and most displayed stigma about these things because they're afraid about what's going to happen when the property is inherited. Yeah, they're known for having higher fees to originate. But apart from that, these are really great loans. For the right borrower, they're absolutely perfect loans. And some people can't do anything else except for a reverse mortgage. So that's where I come in. I help ease the fear, ease the stigma, and make people realize that these are great loans for the right borrower.
What about the people that are concerned? Maybe they've heard of issues in the past where reverse mortgages were predatory. What do you want them to know about that in light of changes that have happened with reverse mortgages over the past few years to protect consumers?
Well, they have had a reputation of being predatory. One, because, I mean, first of all, we're dealing with the elderly. So there are a lot of bad people out there who will take advantage of the elderly. There are lots of checks and balances that we go through these days to make sure that the borrower is worthy. So they have to do a considerable amount of training so they know the ins and outs of how reverse mortgages work. They have to achieve a certificate to show that they have gone through the training. And in the past few years, I wouldn't say severely, but they've put caps on the fees that can be charged. Whereas prior to these changes, prior to FHA backing this type of lending, there were very, very loose limits on the fees that a mortgage originator could charge. Those have all been capped. Of course, some lenders charge more than others, so it's probably not a bad idea to shop around a little bit. But those are the two main things that have changed to make these a little bit safer for all involved.
So let's say that someone inherits a home, they're a personal representative, they're going through probate with the house. They need to access some money to safeguard the estate or make some emergency fixes of some sort. They need quick access to capital. They don't have the personal funds to front the money, and the only valuable asset in the estate is the house. Is there a way you could help them access some money to take care of emergencies of the estate while it's in probate?
The short answer is yes. We do have lending products where a personal representative can access the equity in the home via a second mortgage or even a home equity line of credit. This particular lending product is kind of few and far between. Not many lenders do them. Although I have access to about 130 different lending institutions. We have about 4 or 5 that will lend to a personal representative on a home that's currently in probate.
And in a situation like that, how quickly can they access the money?
The money can be accessed typically in 3 to 4 weeks, start to finish, once I receive an application.
All right, and if it has a reverse mortgage on it and a personal representative needs to access some money, could they do that, or is that just completely out?
That's completely out. So with the reverse mortgage in first position, it's impossible in my world to pull cash from the equity from the standpoint of a personal representative in probate.
Now, even in a case where, say, the reverse mortgage was about 30% of the equity owned in the home and they had this giant chunk of equity, just because the reverse is in first position, it's too risky to give them a loan in that situation.
It is, reason being because reverse mortgages are what's called negative amortization loans. So instead of you paying off the loan each month, that loan amount increases. Thus, it's very difficult to get somebody to lend a second mortgage behind a mortgage that amortizes negatively like reverse mortgages do.
So even in that circumstance with that big equity, what you're saying is that large pool of equity suddenly shrinks month after month, and that's what creates the risk for the lender.
That's correct.